They will be introduced a little bit later on. They are ready and willing and eager to take your questions and comments. And we are also looking forward to your comments on the electronic comment forum, and we'll explain how you get to that just now. Just a couple of house rules before we start with the session. You will see that your microphones are on mute. When you want to make a comment or raise a question, please will you raise your hand, and we will then arrange with Akashan, who is our administrator for today, to give you microphone access, and we will then give you a chance to speak. We have had yesterday a couple of people who could still not speak. If that happens to you, we will then ask you to please type your question in the chat so that your question does not get lost. We will do our very best to give everyone a chance to participate. So we will be going between comments that are posted in the chat box, and we will post the questions to our panel of participants. And we will also look at people who raise their hands and want to verbally participate, so that everyone has a chance to be as involved and interactive as we possibly can make you. We have also posted the links to the 3 pre-recorded webinars in the chat box. So those of you who haven't had a chance to look at the webinars yet, if you would like to copy and paste those links and then go and access the webinars afterwards, you will also find that is very useful for any comments, especially your written comments that you want to make. We will be going through the content of the 3 webinars a little bit later so that you know what is covered in which webinar as well. Then we are going to ask people when they do make a comment verbally to please limit the comments to about 2 to 3 minutes. We have quite a number of people who've indicated that they want to actively participate, and we have a limited time for this webinar. So in the interest of encouraging everyone to participate, if we could then just ask you to be brief in your participation. You are welcome to have multiple participation engagements with us today. When you raise your hand, as I've said, we will give you a chance to unmute your microphone. For the interest of data, we are not going to give you video access as well. We will only give video access to the speakers from the FSCA, but that really is just to try and save bandwidth for everyone. Then what we've also got is we have received some questions from the retirement fund that we will be dealing with later in today's session. We have been asked to deal with that a little bit later, as apparently people have other engagements and they are not able to join us right at 9:30. So we'll probably around 10, just after 10, get to the questions that were sent to us before this session. So we are very happy to start off with questions from the Section 13B administrators before we go to the questions from the retirement funds that we've already received. But having said that, I think that's enough house rules. We will give you a body break about halfway through the session as well, just so that everyone can get their energy going. I'm now going to ask Makgompi Raphahlela to please introduce Raphasha. My apologies, I just mixed up the surnames. I'm going to ask Makgompi, he is the HOD for the Section 13B administrators and the insurers, to introduce today's session. My apologies for mixing up your surname, Makgompi. It's early in the morning. I haven't had enough coffee yet.
No, I understand, Charene. No worries. And anyway, Raphasha and Raphahlela are very close surnames. In fact, they are relatives, even though I'm not related to Andy, but very happy to be working with him. Thanks, Charene, for the opportunity and for those opening remarks. I hope the retirement fund sector is as excited as we are to be with us at this workshop. This is the second workshop that we are having. We had one which I believe was quite successful yesterday with the insurance sector. My name is Makgompi Raphasha. I head up the insurance supervision team at the FSCA, as well as the 13B section. So yesterday's session was quite engaging, and then I hope that the retirement sector will also be as equally engaging as the insurance sector yesterday. But just to introduce the team briefly before I make some opening remarks to set the scene, is that because this is a workshop for both retirement funds and 13B administrators, then you will have the teams that will be responsible for answering questions. From the 13B team, it will be myself and Andy that will be in the firing line to try and answer those difficult questions that you will probably have. And on the retirement side, Corlia is here, Ryan is here. I've seen other colleagues as well from the retirement division. They will be able to assist. We also had a few questions yesterday that are related to policy, the issue around coffee, how it's going to impact the implementation of the omni-CBR. We are fortunate to also have our colleagues from the retirement, from the regulatory department of the FSCA, Lizanne and Johan. They will be able to assist with those questions relating to coffee and any other legislation administered by the FSCA. So that will be your team for today. So just to explain why we are really having the omni-CBR, so people will remember that we introduced a few years back the conduct returns on the insurance side, and that has been a very successful supervision tool that we have been using. And one of the reasons why we introduced the conduct returns was to have a tool that was going to assist us to be more proactive as a conduct regulator, as opposed to be reacting every time when maybe the crisis has already occurred. So these conduct returns are currently being submitted on the insurance side on a quarterly basis by all insurers, with a few exceptions of those that are excluded from the CBRs. But the omni-CBR is part of the objective of the FSCA. And most of you will know that in 2018, then we adopted the Twin Peaks model of regulation in South Africa, which is a model that is used in other jurisdictions in the world. And that resulted in a split between the prudential regulator and the conduct regulator. And you have got the Prudential Authority now that is housed in the Reserve Bank, being responsible for the financial soundness of financial institutions, and the FSCA then being a conduct regulator, then part of our mandate being to ensure that financial customers are treated fairly by financial institutions that are regulated and supervised by the FSCA. But you'll also note that we have also adopted our strategy, and our strategy document from 2021 to 2025 identifies certain key strategic objectives, 5 of them in number. And the very first one is very, very important, and then I think it's very relevant to the omni-CBR, because there what we want to achieve is to improve industry practices to achieve fair outcomes for our financial customers. And I think regulators globally, they are coming up with ways of measuring fair outcomes to financial customers. And we believe that one way of doing that is to really collate data from the sectors that we supervise and regulate. And as the FSCA, we have decided to extend the conduct of business returns that we have seen being very successful on the insurance side, and not to discriminate against anybody, now to include all financial institutions. And this omni-CBR, now you will hear from all the speakers that it is really aimed at assisting the conduct regulator to be more proactive. With the omni-CBR, what we are doing is that we are collecting certain conduct indicators. And those conduct indicators, you have got some of them that cuts across the entire sector, things like your complaints and so on will apply. So that's one conduct indicator that applies across. But you have got certain conduct indicators that pertain to certain sectors. And you will see that the omni-CBR is structured in such a way with that in mind, where you have got the all sheets that will apply to all financial institutions and that deal with issues that pertain to all financial institutions, things like governance, conflict of interest. They affect each and every financial institutions. Then you will have those specific sheets that pertain to your sectors. In this instance, we are talking about the retirement funds and the 13B administrators. So on the 8th of June, we published the roadmap. We also published the omni-CBR template. So I hope that all of you have had an opportunity to engage with that document. And what is encouraging was to really see some of the questions, as Charene has alluded, that came from the IRFA, more on the pension side, you know, and that was a very good taste of what we're gonna be getting today. So we are really looking forward to more engagements. We are looking for questions, both on the 13B side and on the retirement funds. So with that said, I'm gonna just say, please feel free to engage with us. Please feel free to ask questions. There is an opportunity to also provide written comments later on. But what we'll prefer is that people really engage with us by asking questions. Put questions in the chat box. We will try to respond to those. And then, as Charene has also indicated, we will also be happy to take any verbal questions that you will have. So we are very looking forward to a more engaging session. I believe that this sector will even be more engaging than the insurance sector. So I hope I'm not putting anybody under pressure, but we really look forward to a fruitful session. Charene, with that said, I'm going to hand back to you and then to take us further. Thank you so much.
Thank you very much, Makgompi, and for such a very good introduction. And I agree with the comments that you have raised, especially around the value of TCF. So we have our first question. So Chantal, you are the winner of the first question for today. And the question is, will the CBR replace the reporting required by administrators in terms of Board Notice 24 of 2022? So I'm going to ask our colleagues from the retirement funds if they can help. Corlia, are you or Ryan able to respond to this question?
Hi, Charene. It's for Andy. It's on the benefit administrators.
Thank you very much. You can see I don't work in that section. Andy. Andy, you're on mute.
Thank you. Good morning, everyone. Thank you very much. Charene, I think in relation to that question, Chantal, it's not going to replace, the annexures that are required in terms of Board Notice 24 of 2002, because those are audit reports, as you are aware. There's a report from the auditors, certifying various things, for the authority's attention, and also the management representation letter by the board, basically, of the regulated entity. So no, this is just going to be a tool in addition to the annexures that will be prescribed. Thanks.
Thank you, Andy. And I see we have a hand, Makgompi.
Yeah, sorry, I wanted to come in on that question. I think Andy is quite right in responding to Chantal. I mean, Chantal, if you look at the section on the 13B side, you will see some of the indicators that we expect you to report on are currently not part of the reporting that is being done currently. So it will not be replacing that, as Andy has indicated. There is more information that we are looking to get from our 13B administrators, and it's really highlighted things around transformation, the turnaround times. All of those are not covered currently under the current reporting requirements. Thanks.
Thank you very much, Makgompi. Juanita, you've got your hand raised.
Thank you, Charene. Good morning, everyone. So I think maybe also just to start off this session in giving some clarity to the retirement funds and to the 13B administrators, if we look at that first question. We realize this is the first time you will be actually completing a conduct of business return. So the prudential requirements, as Andy and Makgompi indicated, will remain. The point of this was you were going to get your own type of compliance report, and we wanted to work it into one return that we as the FSCA, as a market conduct regulator, will be getting, that we can do this cross-cutting information and data and looking through the different sectors, see the actual experience of a policyholder or a customer, depending on which sector you're talking about, a member in the retirement funds, from where they actually take up the product, how it's being dealt with through administrators, if administrators are involved, and at the end, what the outcome to that member is. So as Makgompi indicated, the questions we're asking here is to actually, and it's a light version, you know, and Chantal, you know quite well about the insurance CBR that has been completed for the last 4 years, and they now have a next level in the omni-CBR that they're completing with more detail, because, and we mentioned that in the roadmap, that we do take into consideration the maturity of the data of the different sectors and where you've been and what you've been reporting on. So we know that you have certain prudential reporting that you're doing. We know that you should be having this data that we're requesting, maybe not in the way that we're requesting it. And yes, you can't really split prudential and market conduct from each other. Some prudential indicators are market conduct indicators as well. However, we were very conscious of the fact not to ask a question that you're already answering in any of the other returns that you're doing on the prudential side. If there is a question that is very much the same, you'll see we ask it at a different level. We ask it in terms of the funds or in the way that the fund is established, whether it is an underwritten fund, a private fund, because there's different risks involved in that. And from the administrator side, we ask about the funds that they deal with. Because there's different risks involved there. So we looked at the market conduct risks that are really ones that we're aware of in that sector, ones that we need to start tracking and getting data on. And then over time, it will mature. Our planning is not to add any questions now in this rollout. As you would have seen in the roadmap, it's a 4-year rollout before we expect you to have complete and accurate data in this returns and complete it in full. And after that, it is a living document. We have to look at what's happening in the industry, and we have to look at what type of questions do we need to add or adjust so that we can address the risks that are in the industry. And this is the same for the retirement industry, whether it's a retirement fund or whether it is a 13B administrator. And if you look at the omni-CBR, and this is also a question we got yesterday, and maybe I'm fielding some of the questions that might be coming up. We do ask questions in a certain sector and then we'll ask it differently in another sector. It's not duplication. It's because we're following that product cycle. We're following the cycle of that member that you have. So for instance, on the insurer side, we ask them about the policies that they're selling. We ask them about their target market, and on the all sheet, you'll see we're asking those type of questions across the sectors. And then we have very specific questions on these additional business composition sheets. We believe we need to address a specific risk in your sector, and we need to drill down with a little bit more detail. And we're asking questions that we were very aware of the POPIA Act, and asking questions that we think that you know and that you would have, and that you wouldn't necessarily have to get for your existing book, but also that you would be able to update on an ongoing basis and make that as easy as possible for you. So we realize system work will need to be done. But the questions that we're asking here is very much in terms of looking at inclusion, looking at who is your member, who are you dealing with, so where are you with your transformation plan, looking at is the funds that you're dealing with really appropriate for the member that you have. Then is your disclosures, if we look at how that behavior is that disclosure then really appropriate for that type of member? Is the outcome fair as they would have expected? How many is going into default portfolios? Those type of things, and that we wouldn't get from a prudential return. So when you also comment on, and we do know there's an issue with the comments portal, and we're dealing with it. It's available, but when you go in, it shows something different, and we'll resolve that ASAP. But when you give the comments, we really want to know not just that this is a new question, see the risk that we're asking, and that's why we really, especially for the sectors to which this is a new return, invite you to come to us in person or have a virtual engagement, ask us about the thinking. There's not one question on here that we're not going to use. We use it also for benchmarking. We use it because we want to give feedback to industry, even if it's going to be on a very aggregated level in the beginning. And it's not because not one of them are linked to a specific risk that we have identified. So if there's questions around that, please have that discussion with us before you comment. What we would appreciate in the comments is if you think there's a better way to ask it, to still identify that risk, to give us that suggestion. Maybe just to give some clarity, because I know this is a new concept for this industry. Thank you.
Thank you for that clarification. We have a question from Leon, and she's asking, so Andy and Makgompi, I think the two of you are probably best placed to respond. Won't Board Notice 24 be replaced by the Administrator's Conditions Conduct Standard in any event?
That is correct, Leanne. We've already issued out. Sorry, I am unmuted. Can you hear me now?
No, we can hear you, Andy. Yes, I can hear you.
Oh, okay. Sure.
Yeah.
So we have revised the conditions that are applicable to benefit administrators. So those conditions in Board Notice 24 will be replaced by the new conduct standard that will be issued. We've already issued out the conduct standard for comments, and obviously we've received a lot of comments from industry, and I think everybody's aware of that. So we're busy processing that for now, and I think with time we will issue a revised conduct standard and revised conditions for benefit administrators, including what Chantel was referring to, Board Notice 24, Annexure C and Annexure D. Thanks.
Thank you, Andy. Akashan, could you unmute Chantel, please, because I see she would like to speak to us. Chantel, you should be able to unmute your mic.
Good morning. Are you able to hear me?
Yes.
Okay, great. And thank you, Anita, for that explanation. And I think, for the retirement fund sector, this is something completely new. I wanted to find out, is there any discussions potentially around issuing a guidance note for retirement funds in terms of how they need to complete the CBR? Because the terminology, just looking at the company information, is very tailored to how we understand it in the insurance sector. So just looking at, the first one, which says name of shareholders and names of directors, would the FECA consider issuing a guidance note to say what would that mean in a retirement fund context? So instead of completing name of directors, you'd be listing all the board members' names and so forth.
Thank you, Chantel. Juanita, can you respond?
Thank you, Charene. Thank you, Chantal. It's nice hearing your voice again. We haven't spoken in quite a while. I actually just want to check. you'll see that we do have extra governance questions on the specific business composition additional sheet for the retirement funds. I'm talking about retirement funds instead of pension fund, although it's pension fund on the return, because I've already seen from the comments we received, we need to align it to COFI. So we'll speak of the retirement fund, but we're definitely open to two things. One, the same as what we did also with the rollout of the CBR when it came to the insurers back in the day. We're more than willing to have workshops with the different funds, have more of these type of webinars to explain it. If there's real need, we can have a webinar to say what exactly it is, what we mean. Also in the comments, I mean, if you would like us, we try to, especially on the declaration, try and provide for it that it can go across sectors and that we do talk about trustees. But if it is that in the company information sheet, because we're talking about the shareholders and it's not applicable to you, you would want an additional question, or we should say / trustees. We're open to those suggestions. So you're more than welcome to put it in the comments area for us, and we can amend the return. This is really, it's the first for us too, so we can work on it together. We try to get the terminology to work in a way that it will work across sectors. And maybe while I'm speaking about that, I derail often, but also on the terminology sheet, you will see that if there is a specific definition in the sector law currently, we didn't include it in the terminology sheet because it would apply. In the terminology sheet, we only try to give descriptions to words that we're asking in certain questions across the sectors where we know either it's not being defined and it creates a gap for different interpretations. And we want the information on a certain level so that we can do that peer groupings and we can do the benchmarking exercise and we can actually look at where the market is going. So we gave that for clarity. We also did try and align it as far as much as we could to what we're expecting to be in the COFI bill. And that's why we have, when you choose which sector you are on that company information sheet, a few of the activities in the COFI bill that have been identified and that we're 99% sure would stay there, and that we're just trying to gather some information on it. But the other definitions or descriptions in the terminology sheet is really for guidance. And if it is, we did pick up 1 or 2 mistakes in the terminology sheet that was published, and we'll try and rectify that before you have to comment, which closes on the 10th of August. Otherwise, you can highlight that to us and we can amend it if it doesn't work for your sector. I think you would appreciate that it was very difficult trying to get a return, especially on the all sheets that will work across and getting terminology that will work across. And we had 2 years of many workshops and consultations to get it right, but we could make mistakes, or we could do it in a better way. So if there's a better way to do the company information sheet and there's a better way to use terminology, we're totally open to suggestions. What I would prefer, and that's my personal preference, is that we actually have a meeting then and discuss that instead of the written comments, because sometimes we don't understand the written comments and we anyway have to go back and say, let's talk about it, let's really thrash it out. What is your suggestions? Because again, we would like the alternative suggestions so that we can see how to improve it. This is a return that will add value to the funds and to the administrators and to us as the FSCA. It's a type of information and indicators we think you should be tracking and you should be looking at, and it's what we want to track. So let's work together and trying to get it in the most practical way, or the way that you would understand it. We're not thinking of a guideline on how to complete it. That wasn't something that we were thinking about, but doing another webinar on how to complete it, that is an option. Or like I said, we can actually still adjust it. And that's why we're doing a very long consultative process here. This round is really just on contents, and then the next round is more on functionality. So also maybe just to answer those questions, we know that you can't complete anything except a few fields on the company information sheet currently, and we only open that up so that you'll be able to customize the return and look at what you need to look so that you can give comments on that contents. We also know that certain of the cells are not formatted correctly. The ones that you do need to complete to customize, those are correct, and you can use it to customize the return. In the next round, when we talk about functionality and practicality, and we want volunteers for a pilot, then we look at, you know, each cell and how that cell will work, and if it has to be a yes no cell, that it works that way and that numbers are in the other cells. And then we have all the IT people and the data specialists in the room, and we have that discussion then. So this is really more about content, and also we're very open to additional questions, something that you know is a risk in the industry and you think that we won't be getting it through this information. If you look at the all sheet and your business composition additional sheet, because that's everything that you'll need to have to complete, please give us those suggestions.
Thank you very much,
Juanita. I don't see any other questions at this stage. So I think this is an opportune moment to start going to the questions that you've already received.
Charene, may I just add on to
Makgompi?
Yes, on that feedback that Juanita provided. It is quite correct that we are not considering a guidance note, but I think it is something that we are not really opposed to. I think this is the point that I want to make, that as we said, currently the only sector that is providing this returns to the FSCA then is the insurance sector. But there are other sectors that we're still going to have workshops with: the banking sector, the CIS, and other sectors as well. So I think if we get similar comments to what Chantel is saying about the need for a guidance note, that is something that will be considered. So the whole purpose of these workshops is to really get views, as colleagues have indicated. And then I think if there's a need for a guidance note, then that will be considered. But I agree fully with Juanita that the most practical way of clarifying any issues emanating from the omni-CBR is by way of workshops and meetings where we can speak to these issues verbally. Thank you.
Thank you for that, Makgompi. So we will continue to monitor the comments that people make for us. I don't see anything in the chat, and I don't see any hands at this stage. So Juanita, can we start looking at the questions that you had received prior to this session?
Yes, thank you, Charene. I'm just looking at the document. So when I look to that side, it's because there's another screen. We have the omni-CBR open, and I also have the document that we received from the Institute of the Retirement Funds Africa. A few remarks were sent before the session today that we would like to address. The first one is the one that we already addressed in terms of not talking about a pension fund, but by rather referring to a retirement fund, as that is the way that we refer to it in COFI. And that is a note that we're taking, and that is an amendment that we will make. Maybe what is important is also just to position this in terms of where we're going, and we did try and do that also in the webinars and in the roadmap. And if Johan is still on the line, because I know he also needed to join another meeting, you can maybe just add to that is, so the omni-CBR process is running concurrently with the development and the finalization of COFI. The two is not dependent on each other. So we have our roadmap, we have our rollout plan. Depending on the comments that we get and how we deal with it, we will try and have the omni-CBR finalized and ready for reporting in 2026. So it's a 4-year rollout plan there. COFI, where is currently where we already had a few drafts, we had the comments, and it's in front of Parliament, and that has a process going on. Nothing that we're asking will not be in line with what we're expecting to be under the standards in COFI, or will not be in line with the terminology used in COFI. So we're actually hoping that it runs together and that we get it done together. and that it will actually complement each other. And that is why it's not dependent on each other. It is running concurrently, and we will make sure that it is aligned. So thank you for that comment, and we'll definitely look into that. And also, like I said, on the company information sheet, that's why not all the activities are already there. That again will be aligned as we develop with Kofi.
Thank you, Juanita. I see we also have Lizanne having her hand up. So if we could, Lizanne, you have access, you can unmute.
Yeah, so I maybe just to the point to add to what Juanita said regarding the terminology under Kofi. I think we agree with the comment that the terminology in the omni-CBR should be aligned to Kofi, because that's where we're moving from a regulatory perspective. So, but at the same time, because we've got all these moving parts, Kofi is currently before with NEDLAC, and then the hope is still on Treasury's side to take it to Parliament this year. In the parliamentary process, the Kofi bill as it currently stands may still change. So it wouldn't really be practical, nor will it create certainty if we now align to what is in the Kofi bill. The intention is, however, that the omni-CBR and this reporting will all link back to the legislative requirements on each and every financial institution. So I agree with what Juanita is saying. Yes, in future it will definitely align. But I think for purposes of now and for purposes of this consultation, to make it clear to the industry, we said the existing sectoral definitions apply. So if you're a retirement fund, the existing sectoral definitions in the PFA will apply. I noted Chantal's comment. Chantal, you're quite right. That was oversight. So the terminology sheet, that preamble in the terminology sheet, needs to be corrected, because it actually intends to cross-reference all the relevant sector laws, not only the phase and the insurance legislation. But just for your certainty, it will be corrected, and as Juanita said, we'll hope to have that up before you submit your written comments. But for now, for instance, the definition of complaint and complainant in the PFA would apply for purposes of this conversation. In the insurance sector, it would be the relevant definition in the insurance legislation that applies. As the regulatory framework changes in future, so will the definitions in the CBR, and that is our responsibility to keep that up to date. So I hope that provides clarity, and I hope that also somewhere at the same time, two flies, one swat, deals with Chantal's comment, Charene. Thank you for the opportunity.
Thank you very much, Lizanne. I also see that we have support from Eric about the terminology and a guidance note. So thank you for that, Eric. We will take that into consideration. And then we have a further question from Leon, who says that to expand on Chantal's comment above, certain of the definitions in the PFA, for example, the definition of complaint and complainant, are not appropriate for complaints reporting under the CBR, and definitions should be included in the CBR that refer back to the expressions of dissatisfaction, for example, as contained in the phase general code for other financial institutions. So thank you for that, Leon. I'm not sure if there is any comment on that. I see Lizanne has her hand up again. Lizanne, please go ahead.
Sorry, Charene, maybe I can ask, I don't know if Leanne's able to come in maybe on mic, just to explain. I'm not sure I understand the comment. So are you saying that the definition in the PFA would not be appropriate for retirement funds and it should cross-reference the phase definition? And maybe just, I'm not that close to it, so maybe if she can just explain what the challenge would be if we use the existing sector legislation.
Thanks, Lizanne. So Leanne, if you can please raise your hand, because then we can unmute your mic and give you a chance to just explain your question and your comment. Akashan, please unmute Leanne. You should be able to unmute and speak.
Hi, everyone. I'm not sure if you can hear me.
Yes, we can.
Okay. Just to explain what we're referring to. So if you look at the definitions of complaints and complainants in the Pension Funds Act, they really revolve around adjudicator complaints. So that's the reason for having them in the Pension Funds Act, and they are not aligned to, more recent definitions of complaint and complainant as contained in the phase general code, as an example, which refers back to any expression of dissatisfaction, and then it goes on to limit that in certain ways. So if you simply refer in the CBR for retirement funds specifically to the Pension Funds Act definition of complaints and complainant, you're not going to get the reporting that you need. Which is why, in the interpretations section, we would need to be careful to, in the case of retirement funds, include the definitions we need to, because they are not always subject to the same legislation as other financial institutions.
Thank you very much for that explanation. I'm going to give Lizanne and then Juanita a chance to respond.
Maybe just from my side, and I think, Juanita will come in, but thank you. I think that clarifies it, Leanne, and I wasn't aware of that difference. And I also note that there was a comment that, and maybe for this particular definition, it would be appropriate to already then align to what is in the COFI bill. But we can certainly take this back, and I think, Juanita, this is definitely two of the definitions we'll then have to consider closer. So thank you for clarifying that. I think we can take it back and consider it as as one of the comments coming out of this workshop. Thanks, Leanne.
Yeah, thank you for that, Lizanne. I actually wanted to say that complainant and compliant was one of the ones that we had to work on the hardest to get a description for. We actually had various workshops on it. There is a difference in how you see it in the retirement fund area, how we see it in insurance, what it is in the conduct standards under the banks, slight nuances. And slight differences. So this was also one of the comments we received from your industry body and that we looked at. And that's why, because we need to also refer to the spouse specifically and the rights of the spouse, the current proposed definition in COFI would be more aligned, especially because compliance is a very big area in the omni-CBR for us. It is a sheet on its own and it needs to be completed by all sectors. So we do need to have a description there that would actually fit all sectors. We don't have complainant in currently, so that was another remark that we had. When we tried to see what terminology to include and what not, we, in the first draft, had more than 300. And then we realized that might actually cause more confusion. And then we really tried to work down to the ones that we feel is really necessary. So we don't have what is a complaint, but we do have what is a complainant. And that one is the one that we need to improve and align more to maybe what is proposed in COFI now. Totally agree with that. Complaint, we didn't define because we're also moving away from the idea. So it was in the compliance handling document in 2011. And we are moving away from the idea that you have something like a reportable complaint and a normal complaint, because basically all complaints has very valuable information for you. And the complaints that you actually resolve the fastest, so the ones that you do in the first day or two, which won't count as reportable complaints, but all complaints are actually the ones that could be the most valuable. They're also the ones that are very often more recurring and shows you maybe a bigger issue in terms of not just disclosure or the advice being given, but a system issue that might be occurring. And therefore we need information on that. So we're not defining or making a distinction anymore between what is a complaint and a reportable complaint. And that's why we didn't define that in the terminology. If there's feedback that there's really need for that to be defined, as you're stating now, then we will. But complainant, we will definitely align, because there is a few sectoral laws where there's a little bit of nuances in how that is explained. Thanks.
Thank you, Juanita. And I think you must just stay online because we haven't received any additional questions in the chat at this stage. So I think if you could go, we have a question from Tammy. Will conduct standards be updated to reflect that change on? So I'm not sure, Andy, are you perhaps in a position, the change on reportable complaints? Andy, are you or Lizanne in a position to respond to that?
Thanks, Charene. I'm not sure I understand the question, though. Will conduct standards be updated to reflect that change on reportable complaints? I'm not sure I understand. Maybe the writer can maybe expand on that. Or maybe they can talk in person. Thanks.
Charene, I think we can unmute the speaker, Tammy.
Hi, thank you. So obviously in the conduct standard for banks, there's currently a requirement for reportable complaints, and systems, etc., have been updated to accommodate that requirement. So I'm just wondering, going forward, if the FSCA is looking at moving away from reportable complaints, will that change then be reflected in the existing subordinate legislation? Thanks.
Thank you, Tammy. I see we have Juanita and Lizanne ready to respond. So in sequence of hand raising, you and Lizanne first. Or Andy, I'm not sure who's best placed.
I think Lizanne is
yeah.
best placed to
Lizanne
answer
is
that.
best. Yeah, thanks.
Lizanne, thank you. Over to you. Of course, can you just give Lizanne mic access, please? Lizanne, you can speak.
I was like getting frantic trying to put my hand up. So, Tammy, to your question around the update of the conduct standards to reflect this, as I said before, it's a little bit a question of moving parts. So as we have indicated in other public forums, we are busy with our regulatory plan and with the plan of transitioning the existing legislation into the COFI framework. So we will be, let me put it this way, we are currently looking at all the existing legislation, all the existing regulatory projects, including, for example, the insurance space, the amendments to the PPRs and the regulations. There's a number of draft conduct standards that were published. And what we're doing is we're putting it all together in a plan to basically fit in under the COFI framework once that comes into effect. So now it becomes a timing issue of which of these standards we will proceed with and which of the amendments would rather wait and form part of the harmonization of the existing legislation. So I don't think for purposes of this conversation, we can really say, well, this standard will be amended and that standard won't. I think what's important to keep in mind here is this is a consultation process on a very big multi-year development for the reporting. We will ultimately align the CBRs and the definitions in the legislation so that it speaks to each other. That's our responsibility, and to make sure that it's certain for you. But I think we can't delay on consulting on the CBRs and this development because it's such a mammoth task, I think, both on our side and on the industry side to do this development, that we now already want to start getting there. And we give you our very firm undertaking. We will make sure that the legislation and the CBR speak to each other. But in the longer term, I think the conduct standards must fit in under COFI. At the same time, then once the omni-CBRs come into effect and we've got our steady state reporting, as Juanita always likes to refer to it, I think at that stage, we'll have to again make sure that it aligns. So it's very good to have these conversations and to understand, for example, the definitions of complaint and complainant that was discussed. These are the types of things we can already bring in, and that's the type of certainty we want to engage. But I think the engagement is very important. Regarding which conduct standards will be changed and which won't be changed, you can maybe all just note, keep a look out. We will be publishing the regulatory plan, abbreviated version of the 3-year regulatory plan. And I think a lot of certainty will be created from that perspective as well, because that will give the entire industry an indication of what the FSCA will be proceeding with, what will fit in under the harmonization and transition projects. And also maybe just keep in mind, we will also be consulting on each and every one of those instruments. So I hope that that addresses it. I just want to see Tammy responded, potentially amendment in future based. Yes, that's in short what I meant. Thanks, Tammy. I think Juanita wants to come in.
Thank you very much, Liza and Juanita. And then we have Chantal.
Thank you, Lizanne. You always explain things so much better than I do and so eloquently. I think, and the moment that Chantal raised her hand, I thought this is also something that I just need to explain. So none of the work that any of the industries are currently doing in terms of complaints or anything else is unnecessary. So even if you split it into complaints and reportable complaints, when we're asking you on the omni-CBR to report and we're saying we're making no differentiation, you as an entity should have one central register with all your complaints in, and you should be able to bundle them then together. You anyway needed to be able to define them according to the TCF categories, and you'll see the way that we're asking complaints on the complaint sheet. We didn't differentiate or create move away from the TCF outcomes or the categories. What we did do is we did split one into two, because that made it a little bit clearer when we talk about product design, to make it just a little bit clearer what we're referring to. And that was based on a lot of feedback we got from various sectors over the years, from where the first document in 2011 came out. And obviously, because we're moving with times and we're moving with the risks, we're now asking about complaints when it comes to your systems with migration and downtime. And that is also something relevant to all the sectors that we're asking about. But in the meantime, because we don't want you not to do work on development and things, and not to do the reporting that you're currently doing, it will just be a question of you'll put them together to give us the grand total, if I can put it that way, whether you split them as reportable or non-reportable. The thinking behind that back in the day, as I put it, was that we thought there would be so many complaints that we wouldn't really need to know the non-reportable ones, because we'll pick up the trends in reportable complaints. And as I said in the insurance workshop yesterday, we've come to realize that this is one of the most difficult areas for any entity to report on, and that you actually don't have so many complaints. And there's so much valuable information in complaints, not just to know about what you're doing wrong or what you could do better, also to see where the gaps in the market is, to see who is actually a liability, maybe possibly to your entity in terms of reputation, and where you need to actually close in and kind of tighten up your processes and procedures. So although all of this development is in future and there could be changes in future, don't be too worried about it, because you're currently anyway capturing that information. It'll just be on how you report it through to us as a total, if that gives any comfort. Thank you.
Thank you, Juanita. And we're going to come back to that just now, but we're going to give Chantal a chance, and then there is a question in the chat box that I will do, or a comment in the chat box that I will pose. Chantal, you should be able to speak.
Thank you. So Juanita, I know the IRFA sent through their comments, and maybe just one that I'd like to discuss now is how to distinguish between retail and business when it comes to retirement funds. So there is an explanation or a definition for what's considered retail, but just to understand in the context of all the different types of retirement funds that we find in the industry, which funds need to complete the retail tabs and which ones need to complete the business tabs.
Okay, thanks, Chantal. I'm going to give this my best shot, and then the experts in the retirement area can come in if they want to provide more clarity. So remember, the difference between the retail and the business is on the all sheets. So in the all sheets, we do say who is retail and we do say who is business, and basically that is the individuals that is on the retail side, and we have the businesses, with other words, where you have fund revenues, of $1 million and more that you would see on the business side. And then when you customize it, you'll see that the type of funds is then actually either that it's an underwritten fund, or it's a private fund, or it's a self-administrated fund. And when we talk about the 13Bs, we talk about retail and non-retail. But when we ask about the type of fund that they actually administer, that's what we do on the business composition additional sheet. So in my mind, I would think that the funds, the retirement funds, will basically all be on the business sheets, because you'll have a fund value of 0 up to 1 million in the first category, and then it breaks it down up to over 10 million. And we do say it's not just annual turnover, but it's also fund value. So for me, I would think that the retirement funds will all basically be on the business sheets for the all sheets, and then you'll complete it in terms of those columns and how the funds are established, because like we said, there's different risks involved there. And if you're a 13B administrator, you will then say retail, non-retail, and then tell us what type of funds you're administrating. So that is how I see that it would be completed. If you see a different way where you do think some of these funds would actually work in under the retail space, I know that you gave suggestions about, you're saying on the retail space, it should be the preservation funds and the retirement funds and so forth. And on the business side, it should be the pension funds and provident and the umbrella ones. But remember, on the all sheets, we need to work across sectors. So to work that, we can amend the definitions, but we wanted the breakdown of the target markets to be in such a way that we can follow it across the sectors. And that's why we talk about fund values, because that's something we believe that all the funds will have. It is something that annual turnover other sectors would have, and you would have fund values. The size of the fund will tell us kind of what market you're going into. And remember, then we also ask about the ages when you get to your specific additional sheets. Then we break it down into salary bands and into genders, and we go into much more detail about exactly who is your target market. And there you will see we actually have more specific questions around that. But if that doesn't practically make sense to you, and you have another suggestion on how we can do it on the all sheets that will work across all the sectors, or that we need to amend the description in any way, that is something that we would definitely consider in the comment space. But I did see that remark, and I think what we must remember is when you customize it, look at how the columns actually customize on the sheet. What is our description, and then look at how we break it down even further into your business composition additional sheet.
Thank you, Juanita. We have two
Sorry,
comments about your comment on the reporting on the reportable and the non-reportable complaints. And Leanne is worried that in some cases she's seen that administrators work to resolve complaints within the non-reportable time period so that they are not required to report them. And she's wondering if requiring reporting on both may possibly lead to longer complaints resolution times. So Leanne, I think that's one of those potential unintended consequences. So that is something to just take into account. We can't always predict behavior. And then Godfrey or Fahad, I'm not sure, also thinks that there might be key insights that can be gathered from understanding the dismissed versus the upheld complaints. So I'm not sure if there's any feedback on that. Juanita, I see you've got your hand up.
Thanks, Charene. And again, I'll give it my best stab, and then the experts can come in and say whether there's anything more to add. So if I can talk about the first one about the non-reportable complaints and whether that would actually have that unattended consequences of causing a delay. That's also why we ask about the turnaround time on complaints, and we ask about the outstanding complaints, and we also ask you to break it down into the target market to see if any complaints in the target market is dealt with differently depending on the type of customer it is. So this is not actually a different issue than what insurers have with outsourcing, or even that the asset managers have and so forth. You have your outsourced partners. They do try and deal with these complaints as fast as they could so that they don't have to report it to you. But that was never the intent. The intent about reportable complaints is what we would ask from you. You needed to have that register, even with the ones that they needed to, or the ones that they can resolve within a day or two, because that is the most valuable information for you. If there are complaints coming in and they're able to resolve it within 2 days, kind of be like a buffer, and you never see those complaints and you don't know what it's about, and it could be something about they're not getting communication time missing. And it is something that you can resolve quickly and you never find out about. How would you know whether that administrator is a good administrator and you should be renewing that contract, or when they do their presentations and show they have no complaints and they're trying to convince the trustees that they are the administrator to actually deal with it, that is the best option? You should be knowing how many of those complaints they get, what is recurring, what is the themes, what is the root cause, how quickly do they resolve it. And because we're getting all the entities now to return, to actually complete this conduct of business return, the indicators, the market conduct indicators that are important to members will now be top of mind, not only for retirement funds, but for everyone in the value chain. And everyone will be reporting on it and everyone will need to focus on it. So it should actually better the turnaround times, and also it will show you the effectiveness of the complaints handling process, because you can resolve complaints within a day, but if they're recurring or a person needs to come back again and again about the same thing, there's not an effectiveness there. And this is helping you to have that oversight and that monitoring. So there's a lot of things that we're asking in the omni-CBR. Yes, it's important to protect members, but it's also going to assist you as a retirement fund in making decisions in the future and really having that oversight and monitoring, because everyone is now actually reporting on it. So I don't think that we'll have a bad unintended consequence there. I could be wrong. You're much more involved. It's much more practical to you, and you're welcome to show us unintended consequences. But I actually think we're going to start improving and making your work easier in future. In terms of the second question about upheld and dismissed, I just quickly want to go to the complaints sheet that I have here. Unfortunately, I can't share, but I do just want to see, because we did have a discussion about whether we will be asking questions in that regard or not, about the total number of complaints that you're getting. We're asking you about where it comes from, the channel, which is good for you to know. We are asking what it relates to. We ask about determinations because that is quite important to us, and whether things are settled in favor of the customer. So obviously that would have been something that is upheld, and whether you need to make compensation payments, because that's also not a good way to do a complaints handling or to try and be effective. So we don't ask about dismiss and upheld, but we do also ask you about the quality assurance that is done on complaints, to also see whether the right decisions were made and the way that it was communicated. If you feel this is something we need to ask to actually address a certain concern that we have in industry, and that we won't get it from what we're asking currently, then you're more than welcome to make that suggestion. Look, we have a long list of questions that we actually really wanted to add, but we tried to keep proportionality in mind, and we tried to see that this will go into phases. So seeing how many complaints you're getting, seeing how many are resolved, seeing how many determinations you're getting, how many you had to go in favor of the complainant, seeing how many you had to resolve with compensation payments, seeing how many is then still outstanding, and whether you do quality assurance on it or not, will actually give us an idea of the process and the quality of the process and the risks that we've identified. Not necessarily asking about the dismiss and upheld, but if you have a different view, you're welcome to let us know in the comments.
Thank you very much, Juanita. Akash, could we unmute Eric? He has raised his hand as well. Eric, you're welcome to go ahead.
Okay, if you can hear me. I'd like to move away from complaints. I've got two comments or points here. The first is coming back to business versus retail. So in respect to retirement funds specifically, the question is types of customer, and then the options are business or retail. And in your terminology, you've got retail means the provision of financial services and products to a customer who is not a business. So to me, that clearly indicated that retirement funds must complete the field as retail. So Juanita, if you're saying you think it should be business, I mean, I think this is just highlighting the point that you've got to give some guidance here that will assist pension fund trustees, and probably pension fund administrators as well, in how they're supposed to interpret this thing, because otherwise we're going to get wildly different potential interpretations. The second point I want to make, so I picked up not just on the movement of money sheets, but on the conflicts of interest sheet. There's a section source of income, and that includes for the reporting period dividend income and interest income to be completed. I don't know why you want those, but I'm just going to make the point here that this is going to mean that pension funds will now have to get their administrators to prepare quarterly management accounts, which most funds, except probably the very biggest, are not doing at the moment. The administrators are going to ask for extra fees about this. This is going to be an unhappy thing for trustees. So again, they're not simply those fields, but other fields in other tabs are going to be asking for quarterly information, which is not easily and automatically available at the moment. So we will be making this kind of comment formally through the comments process, but this thing is not going to reduce costs for retirement funds. This is certainly going to increase costs. So thanks. Those are my 2 points.
Thank you for your feedback, Erich. Juanita, would you like to respond?
Yes, thank you. Thank you for those remarks. So I think if we look at, because I see Chantal's also asking about the retail and the non-retail, when we look at the 13B administrators, it is a point that we'll take back on to more clearly define what we then mean with business and with retail. And when you're a 13B administrator, what would fall under retail, non-retail. You work on these things and you have these discussions, and in your mind it is clear, but if it's not clear to industry, and we take that point, because I mean, it's like anything that you work, you won't believe how many times we looked at this return and we didn't pick up the small mistakes that we made, even in trying to correct some of the wording here. Then that is definitely something that you can say in the comments, and definitely something we can consider. Like I said, and alternatives would be very welcome, so that we can understand practically why is our suggestion not working and what suggestion would be working. And again, we're more than willing to also have another meeting, have another workshop, thrash out these things that seem to be clear to us and that will cause confusion, because we do want accurate reporting. And the easier the way the return is to complete, the more accurate the reporting is for us. So we're working towards the same goal. That we have to remember. We don't want to make it difficult. We want to work towards the same goal. In terms of the questions about the movement of money sheets and the conflict of interest sheets, we didn't say that the return wouldn't cost you money. We know that compliance is expensive and it does cost money, and that it takes time and it's system built and there's additional requirements. We are aware of that, and that is why it is not something that we're implementing today and expecting reporting on by the end of the year, for instance. That's why we're doing it over multiple years. So that we can look at the cost. And again, this is part of what will also be highlighted in the second round of consultation on actually doing that implementation, and what is the cost involved and how much time do we need to change structures. The fact that something has been done a certain way always doesn't mean that it can't improve. It doesn't mean that it's the right way of doing it. It doesn't mean that we can see the risk to customers or to members. Sometimes things need to change for us to actually identify the risk. The things we have in the quarterly, the indicators that we're using here are the indicators that we believe is so volatile that we do need to see it on a quarterly basis before, so that we can be more proactive as an authority before there is an explosion in the market or a fund falling, or us making a legislative change that makes no sense, because this is the type of information we'll also need for that. So we're not saying, it's also a big cost for the FSCA. We had to upgrade a lot on systems. We need to get in new resources. We need to get in better experts to help us to analyze information so we can do the benchmarking, give the feedback to the industry, guide the industry in the right direction. So it's a change for everyone, and there's costs involved for everyone. And that is why it's over multiple years. The fact that you don't have it now, or that you're not doing it that way now, we take note of that. And that is why we tried to do it in this way and do it very gradually and do this very extensive consultative process around it. And yes, things will have to change to be able to give us certain indicators. And you can show us which one you think is not necessary. But if I can maybe just take you behind the thinking about the movement of money. So I also said it yesterday because I always feel a little embarrassed when we talk about the term money, but it's the only one we could think of that would include contributions, premiums, payments. When we look at the all sheets, that would be applicable to all the sectors, because you can't say cash and you can't say a payment, because it means different things to different sectors. So that's why we talk about money. So the movement of money is, when we look at that sheet, it is about your sources of income and it is your expenses. And we do want to see where the money goes to. So you'll see on the business composition all sheet, we ask you about a breakdown of your book. And we ask you how much of your book is in terms of fees and charges and interest, and then the actual work that you're doing, your actual money received. And here we're trying to break down that money that you indicated on that sheet. Where is it coming from? Is it in terms of fees that you're getting it? Is it in terms of dividends? Is it in terms of, so when I look at the sources of income we're referring to here, is it all of those type of fees, the referral fees, the dividend income, the interest income, other? And remember, when you say other, you have to tell us in the comments what that is, because we also want to monitor the market and see if there's a certain area that expands or grows over time. Then we know it needs to move up in the return and we need to start monitoring it. So we do need to know that question that you answered for us in the beginning on the additional all sheet, business composition all sheet, exactly where is that income coming from? Then as a business, and I mean, this is valuable to you as well. We do want to know, are you making money from what you're supposed to be making money from, for what you are registered and licensed for to make money from, or are you making more money from other sources? Then and financial interests there, we also we looked at the definition we have in the FACE Act, and in the FACE Act it actually has the non-cash incentives included, but we wanted to exclude it because there's different risks involved, and that's why we split it in those questions. And that's why we also look at the funds that you're investing, and in which portfolios you're investing, and that you're making money from that, because it also shows us the thinking behind your strategy and how you're dealing with your funds, and if there's any possibility that that is influencing the way that you're dealing with your funds and giving advice. On expenses, this is something that is a risk that has been identified in your industry, that we do have trustees and principal officers that make a lot of money for being paid to attend meetings, and therefore have more meetings than necessary because they want to be paid for attending those meetings, but you don't actually need to have so many meetings, and not so many decisions are being made and many things are discussed. So the expenses that are being paid for it is not just a remuneration, then there's the expenses of traveling, and all of this has an influence on the fund, and it has an influence on the outcomes to the members. And that is why we need to know where your expenses are and where the movement is going in terms of fees, and what are you paying, and is what you're paying really then in the best interest of your members. So there's definite thinking behind that, and there's thinking behind how you incentivize your staff and what you're incentivizing them for. And in terms of these questions, we actually got a lot of guidance from the CGAP team from the World Bank. Because it's not just about the purpose of the entity, it's about the purpose of the customer, in your case, the purpose of the member. What is it that they're expecting from this fund? What is it that they need? And are you incentivizing your staff to actually deliver on that or not? in terms of queries, in terms of how they deal with it. There will be certain questions on some of these all sheets that won't be applicable to you. That is so, and we also said it in the webinars. And then you'll put in a 0. And we'll allow you to put in a 0. We just won't allow you to submit any return with a blank cell. But if it's not applicable to you, you put in a 0, and then we know that you did think about it and it's not applicable. And if we think it should be applicable to you and it's applicable to all your peers, it'll be a flag for us to have that engagement with you. No actions are just going to be taken on one tool that we're using, but it is flagging things that we need to discuss with you. So when I look at the questions that we have on the conflict of interest sheet, and we're looking at the movement of money, they were specifically looking at payments. I see I was on the conflict of interest sheet with the previous explanations. On the movement of money, we're looking at refunds that you're making, which in your world might not be so big, but there would be other payments, there would be other instructions. We need to see how quickly you're reacting on that. We need to see whether you're treating all your members the same. We need to see that you're not taking the maximum time that you can take to make a payment, but that you actually try and deliver on a fair outcome and try to make it faster. And I know there was a comment also that we received from the industry body asking about the breakdown of the turnaround times, and we're asking it on the retirement fund side, and then what about the 13B administrators and legislation, and how is this all coming together? So firstly, admittedly, we did make a mistake in how we actually wrote down the turnaround times there. So it's not 116 days to 30 days. It should be 16 days to 30 days. There's a 1 too much there, and it will go across all the sheets, and we will correct it, and we take note of that. But we do need to know how quickly you pay out benefits, and we do need to know how quickly you do payments as a fund, as a retirement fund. Then we ask the 13B administrators. It's not a duplication of questions. We ask them how quickly they actually act on instructions. We have questions on their sheets that we can link to this together. So on the 13B administrator side, we ask them about their turnaround times, whether it's in terms of their service level agreements. We ask them what is the average that they take to do benefit payments, and we break it up for them in terms of resignations, retirements, deaths, to see whether they take the maximum time they can take on certain areas or not, whether there's outliers. Maybe some administrators can do everything for you in 5 working days, and others take as long as they can. The money is lying in their accounts, they're not making the payments. So we will be seeing outliers because we're doing benchmarking and peer reviews. And on the insurance side, we ask them about their turnaround times as well, so that we can see in the whole cycle, where is the delays and why is the delays and what needs to change to actually get that fair outcome. So when we look at these things, it's not that they're in isolation. It's a picture altogether that we're asking. There's no duplication. It is about measuring the exact channel and seeing where is possible delays, where can we help to make it better and have a more fair outcome to a member. I can go on with this forever, but yes. So yes, if you find something on the movement of money that you think that is not applicable to you, you are welcome to say 0. But we also do want to know when you collect the money, in whose account are you holding it, because that is a big risk. And that's a risk that you should be aware of. And we do ask you whether it's with the administrator, whether it's with you, is it in any other account? And we ask you to elaborate on that. And that is something that we need to see in the industry. We need to see what is the trend, and we need to see what is the protection around the value of the money of the members. How quickly does it get allocated? How does it move from the one entity to the other entity in the fund? How quickly does it get allocated? Thank you.
Thank you, Juanita. Akasha, could we unmute Thandeka Silangwe, please? Thandeka, you can go ahead.
Hello, thank you. Can you hear me now?
Yes, we can.
Juanita actually just answered my concern. My concern was firstly duplication. we are an administrator, and I was just already in my head, I can see duplications. So I wanted to know if you are thinking around ensuring that we don't have duplications between the pension funds and what's being asked of administrators. And then also, there was a question that was asked in the beginning with regards to whether the board notice is going to replace this conduct of business report. And I think that's what thinking about. I don't know if the FSCA is thinking about that, because I'm already seeing duplications based on the general objectives of this report and what you ask and the information you require from the a board notice reporting perspective. So maybe we need to align that as well to avoid duplications again. Yeah, and then also, do you have an idea of how long this report is? Because now it's seeming like it may be just a big thing. Like, is it something we can complete in a day? Is it, are we gonna get like a time period in which we need to complete? For example, we may need information from the pension fund. So we don't deal with complaints as the administrator. The complaints would go directly to the pension funds, and that information, based on whether they've been keeping track or proper records, may take a while to get to us. Yeah, thank you.
Okay, thank you for those questions. So one that I think you need to keep in mind when we talk about duplication is when we get the returns, we're not measuring just the 13B administrator against the retirement fund and then against the insurer. So we're measuring administrators against each other. So there's different levels of analysis that we're doing with this data. So your return as an administrator will be one, we're going to measure you quarter on quarter. So when it comes to your question about how regularly, the thinking currently is not in the phasing period. In the phasing period, you might do it on a biannual basis because we're giving you time to actually build systems so that you'll be able to draw the reports faster and be able to populate the return. But the thinking thereafter, it's quarter on quarter, it's calendar quarters. You will be submitting a month after the end of the calendar quarter. That's the same time your pension fund or your retirement fund would be submitting. So they need to get the data together at the same time. So in terms of delay of giving you the data, that's one of the ways that we're working with the entire financial industry together, because again, any entity that has outsourcing or has another party that's involved and needs to do something for them is reliant on their information. We would like it that you wouldn't wait until the end of a quarter to get that type of information. We would want you to have it on a more regular basis so that you could actually do your trend analysis and that you could pick up issues sooner and that you could address it sooner. But for our reporting, that is what we're working towards, and that's where we're hoping to be in 4 years from now. And that everyone is doing the same reporting at the same time so that we can do the benchmarking, so that we can also look in groups. Is the group following the same strategy? Or are they focusing on the same type of target market? When they tell us they want to become very digital, for instance, when we have our engagements with whichever sector in the FSCA, is that something that we can see in the group when we look at their distribution channels or not? Again, this is not the only tool that we use, so we also want to use the information that we get from this tool to what is being submitted to us for the engagements that we have with you, so it's easier to keep the time periods the same. And again, that would be the information you're giving as administrator versus what you submitted as administrator. So that's the first level of analysis we do, is quarter on quarter for you as an entity, so that we can pick up the trends for you as an entity. Then we do peer reviews. And that will be based on your size of your book and the customers that you deal with, the type of funds that you deal with, in your case with the 13B administrators. And we look at whether you're an outlier in a certain area and why would you be an outlier. That would be a flag for us, and that would be something that we would use in the engagement with you to discuss. So if it does take you longer to actually do benefit payments, or it does take you longer to resolve any complaints that come to you, or if you're an outlier in a certain type of complaint, although all of them went to the retirement fund, why? What is wrong with the system or the process? How can we improve it? And again, this is something that you can use to actually better your business. And then we also have the information, so the information on the company information sheet, for instance, is information we need to update our systems so that we don't have to do a cleanup all the time or ask you for information. Certain of the questions we're asking also in the return is just plain checking compliance questions. We're asking it because, yes, you're supposed to report certain things to us. Yes, you're supposed to report changes of board members to us, for instance. But what we have found is the risk in the industry is that this is not happening. So this is then also why we're asking it on a quarterly basis, so that we can update our system, so that we can see if there's a change, so that we can measure it against what we've received, our notifications, and if there's then a discrepancy, have that discussion with you. You are very welcome to highlight anything to us that you feel is a duplication. But while doing that, keep in mind, we're not just measuring you against the retirement fund or the insurer, and we are trying to see the whole value chain. So some of your questions will relate to each other so that we can do that tracking from an FSCA point of view. Secondly, yes, some of the questions we're asking is in your prudential returns or in other statements that you're giving, but we're asking it at a different level, and we're asking it with a different breakdown. And that's because we come from a market conduct perspective, and the level at which you're doing it on the prudential side will not give us the information we need for the risk that we've identified. So when you look at the question, ask yourself, what is the risk that we're looking at? You know your industry better than we do. So you know what the risks are, and you know that we won't see the true picture just from that one prudential higher level information that we're getting. Then to answer your question about the size of the return, believe me, your size is still very light. It doesn't feel that way to you now because it looks like a big return. There is quite a few sheets. It depends on who your customers is and how many of the all sheets need to be populated. And then you have one additional business composition sheet that you need to return or to complete. We have two ways of submitting this. So currently the insurers are submitting it in Excel sheets and they're uploading it onto the portal. And believe me, some insurers have 63 tabs because of the way it's broken down to product level for them. And they're the only sector that currently has a market conduct return. That's why we refer to them. In your case, and in anyone's case, in the omni-CBR, we have two ways of submitting. You can do it on the website. It'll be web-based, which will allow you to go in, complete things, go out, go in, go out, and then only do a submission when you've completed. It will also allow more than one user. So if you're different parts in the business that need to complete different areas, you can complete what you need to complete. And then only do one submission for us at the end. Hopefully, most of the retirement funds, and from what I heard from our IT team, you'll be able to actually submit it on the XML codes, and then it will be an automatic draw. So it will be a big system built in the beginning, and that's why we already gave the XML codes here, because yes, even if there's changes and even if we amend some of the wording of the questions or add questions or change questions, this will give you an idea of the build that needs to start, and then it will be an automatic extract, and that will be the easiest way. But we're also aware that entities are different, and they're different in their size, and they're different in how much capital they can actually input here and actually spend on this. But we're giving you a month every time, basically, to complete the return. Thank you.
Thank you, Juanita. Makgompi, if you can go ahead with your comments.
Yeah. Thank you, Charene. And just to contribute to this question by Thandeka on duplication, and I'm more interested in obviously understanding what maybe Tandeka or any other member of the industry view as duplication between the proposed conduct standard and the omni-CBR. I think that will be interesting for us to know what that is and address it. But related to an earlier question about whether the conduct standard will replace both Notice 24, and I think Andy did point this in his response that we have received comments on the conduct standard, and then those comments are being considered, and then once we have finalized the process, we will decide whether to go on a second round of consultation or how to take the standard further. But there's also, obviously, and we have reported this publicly, that there's this harmonization project, and I think Lizanne alluded to this earlier this morning, that we are also working on. So assuming that there are duplications between what we are asking for in the omni-CBR and in the proposed conduct standard, I think it is very important for the retirement sector to keep in mind that, you know, that conduct standard, there might be a delay before actually it gets finalized. So you will be providing feedback, reporting on the omni-CBR, and to the extent that there will be duplication, that we pick them up while you are reporting on this return, then that will afford us a perfect opportunity to work on the conduct standard to see what the duplications are and then how those can be addressed. But I think I'm personally interested in understanding what the duplication are between what we are asking for in the omni-CBR and in the conduct standard. Thank you.
Thank you very much for that, Makgompi. Marilee?
Thank you, Charene. I want to say, rather highlight 2 points that I think is very important. We have been through a journey with the insurance industry in introducing a CBR, and the concerns and the worries that they had initially were not different from what I think we are hearing today. We know that a lot of work will be required and will be needed to go into this and to actually provide this reporting to the regulator. But I think we want to emphasize that this is not only a document that the regulator should be using. This is something that you as the entity should be using proactively and preemptively to see where risks are rearing their heads, where you can put in controls rather than wait for something to go wrong. So this really is something, if you are willing to implement the time and really work on the initial stages in getting the accurate information read in there, then it will be very majorly beneficial to yourself. I think the insurance industry have learned that this is not a return or something that you leave for 2 weeks before the submission date. They are constantly working on the information that go in there. And with this comment, I just want to say that it's also very important who in your organization you get to complete these returns. It must be someone that, and preferably more than one person who are, who's able to understand the risks. We sometimes found in the insurance side that we had actuaries completing this, but do they really understand the risks from a compliance perspective? So I would like to urge you to think around, not only how, but who completes these returns as well. Thank you.
Thank you, Marilee. I'm going to go to the chat function because there's been quite a few comments made in the chat function that we haven't addressed yet. So Pierre asked, how do we avoid duplication for entities that have multiple licenses? For instance, they're an FSP, a 13B administrator, and an insurer. Juanita, I think you are the best place to respond to that question.
Thank you, Charene. So the thinking is that an entity would complete a return for that entity that it's licensed for. So if you're an FSP, you do a FSP return. If you're an administrator, you do an administrator return. However, The thinking is, and this is something that we also discussed in the workshop yesterday, that you would be able to put it in one return. So the all sheets would be, if it's applicable to you as the administrator and the FSP, it's the same clients, it's the same information, you would actually complete the all sheets for your entity. And then you would have the FSP business composition additional sheet that you need to do. So it'll make your return a little bit bigger, and you will have the 13B business composition additional sheets that you need to complete, but it will be one return that you submit. You'll see on that first sheet, we ask you to identify not only your entity, but also your FSCA number. And the reason why we refer to FSCA number is we know it could be an insurer number, an FSP number. There's different ways on how we identify you. All the information is going to the same database, the same BI platform that we're using, and all the different sectors would be able to pull their dashboards from there and their reports from there and actually use it, whether it's now for looking at your phase license or whether it's looking at you as a 13B administrator to do that type of analysis that I referred to previously. Currently, you won't be able to do that on the return. You won't be able to choose more than one sector on the company information sheet. You'll only be able to say you're either a 13B administrator or a financial advisor or insurer, and then you'll see the size of that return and comment on the questions in that return. And if you then want to see what you have as a financial advisor, then you'll customize it that way. It doesn't mean that we won't be able to actually give you that functionality in the future. We just didn't want to overwhelm the industry and cause more confusion in the customization process and trying to get comments. If the comments that we do get on the comments matrix is overwhelming to say that we would want to complete one return, because you would understand that it's just one additional sheet in most instances, then we can allow for that. But you have to practically look at how would you then answer the activities. It will be longer for you to answer, and there will be more tabs. So the return will appear bigger, although it's actually just an additional sheet. So it would be possible if that is what industry wants us to do, to avoid duplication.
Thank you very much, Juanita. Leanne made a comment where she said that, and this was about the earlier discussion around reporting time. So she said that she agrees with you, Juanita, that it could be dealt with through asking for information about reporting time. So I think that's still the complaints discussion that we had. And it will mean that public information about complaints about administrators will look as if complaints have increased dramatically because of the introduction of previously unreportable complaints, whereas they possibly have not increased. Nevertheless, she does think that the information is useful. So that's just a comment. We've had some responses where people just agree with what has been discussed already. Eric makes the point that retirement funds are not businesses. So I think that's something that we must just keep in mind. And then Amos is asking that maybe we need to look at the size of funds relating to costs. For instance, bigger funds might not have any financial impact. In that case, this could be rolled out to bigger funds first. So I think that's just a comment at this stage for us to consider. Then Nasli is asking whether the regulator is looking at maximums or guidelines on trustee funds and or meetings relative to fund size. As administrators, we are obliged to attend meetings scheduled by funds, whether we think these are productive or not. This has an impact on cost and delivery. I'm not sure if there's anyone from the retirement fund session that wants to maybe respond to this. Corlia, could I ask you if you can respond?
Yeah, I was struggling to just get everything. Yeah.
Corlia, just unmute yourself.
We can hear Corlia.
Yes, we can hear
Thanks,
Corlia.
Corlia. Sorry, it was me that was muted.
Yeah, we do look at it when we do compliance visits. Do you think it's maybe that we need to ask additional question on this? Because we do look at it when we do compliance visits. So I don't know.
Thanks, Corlia. Maybe Nasli, do you want to raise your hand and just verbally explain your question or your comment? I see Makgompi has raised his hand and then Nazli. So I think Makgompi, if you don't mind, let's just go to Nazli first. And then I'm going to give Makgompi a chance.
I think we can let Corlia finish this question. I just want to comment on the on Amos, the comment before this one.
Okay, thanks, Makgompi. We'll come back to you. Nazli, you, sorry, you're unable to unmute yourself.
Hello, I think I'm unmuted now.
Yes, you are.
Thank you very much. So my question is, I know that the regulator looks at it when they do on-site inspections, etc. But I'm asking from a standpoint or a guidance sort of perspective, is it something that you're looking at to say, you know, if you so some funds have excessive meetings, and I know that we've engaged with the supervision department previously in terms of, you know, a situation like that. But other funds as well, if you look at the membership relative to the assets that they carry, the meetings seem excessive. And as administrators, you know, it costs us time and money. So for example, you have big funds that do quarterly meetings, and those are effective. They have an effective PO office that runs, you know, quite efficiently. And that means that the administrator doesn't have additional workforce preparing monthly reporting or weekly reporting, you know, just not to be looked at. Whereas you've got other funds that are much smaller that don't have an effective PO office. And what they do is they have, you know, almost weekly to monthly meetings, which means that the administrator cost is higher, and that cost eventually is passed on to the member. So from a, you know, from a stratification point of view, so if you looked at membership and assets versus meeting or reporting, is that something that you guys have, you know, sort of on your radar is what I'm asking?
We look at cost. When we do we've got a risk-based supervision model, and we do look at admin cost when we identify which funds that we need to visit. So it is something that we do look at. We don't want to get involved in the day-to-day administration and the running of a fund. So, you know, for us to tell boards that, listen, you cannot meet so many times, as long as they comply with the rules. If the rules say quarterly and they want to meet, if there's subcommittee meetings and they want to meet more, depending on the size of the fund, you know, we cannot say, listen, you can or you can't, but we do look at costs. So if we compare cost from the previous year, and we can see that, you know, some of the costs are too high, and we've done it with a specific fund, and we could see, you know, that it's a wasteful time and money, because the trustees are actually charging to attend these board meetings. So we do look at that, and we will focus on that also when we do our compliance visits. But please, we are here for you. If you want to bring something under our attention, there's a whistleblower obligation on boards and POs, but, you know, the administrators bring it under our attention, and we will gladly investigate it further. Thank you.
Thank you, Corlia. Thank you, Nazli, as well. Makgompi, you wanted to respond to Amos?
Yeah, thanks, Charene. I think just to say on the question of costs, I mean, smaller funds versus bigger funds, and I think we are just using those phrases loosely, bigger, smaller funds. But I think what is important is to note that, and I think Juanita has already made this point, that the omni-CBR is a project that, you know, will really end in 4 years' time, in 2024. But I think no matter how you do it, the issue of costs will always be there, and I think that the approach of distinction between maybe smaller funds and bigger funds, I guess it makes sense. But I think we need to bear in mind that there will always be costs to relating to compliance. I think there are other ways that we can try to minimize the impact on the industry on role players as a whole. I don't think that you need to lessen the impact only on the smaller entities, but I think you need to have this across the board to ensure that the impact is minimal and everyone can take that impact. So I think my point that I am trying to make here is that, Amos, I think we have really tried to keep the issue of costs in mind by really stretching this, and not to say that you should have it immediately. But I think the issue of cost will always be there. Considering smaller and bigger funds, we will really consider that, although it may raise other questions where people might feel that they are being maybe discriminated against on the basis of their balance sheet. But I think it is a point that is worth considering. If we can also get more feedback on whether the measures that we have put in place, you believe that they are not sufficient to lessen the impact from a financial perspective. Thanks.
Thank you, Makgompi. We see there's a question from or a comment from Chantal, where she said that the timeframes provided for claims turnaround time need to consider the timeframes that apply to claims paid from retirement funds. For instance, Section 37C and 37D. I see, Juanita, you would like to respond to that.
Yes, thank you, Charene. So, Chantal, I think you've been in meetings where I've said that this is a concern for us. So we have attended, and I know Nancy knows it even from discovery days, there is this maximum time that you have to resolve this, and I understand that the trustees want to be sure that they make the right decision. There's liability linked to it. But we've also attended a lot of these meetings in the past, and we've seen how investigations can be dragged on and how every single thing needs to be investigated before a decision is made. A lot of the investigations, not necessary. Yes, there has to be a balance between liability. There has to be a balance between making the right decision for the fund by the trustees. It has an effect on the members, but it shouldn't be dragged out. So yes, I agree. There are maximum time limits in terms of the Pension Fund Act, but this is also something, remember, legislation is changing, conduct standards is changing, and the way we want you to report will also influence that, because we need to see, is that really always necessary, because it's not a fair outcome to members. I mean, if I personally think if something like this had to happen and it takes 2 years to resolve a claim, when it's not needed, that's not a fair outcome. So we are aware of that. And I think we've had many discussions where the insurers actually say, you know, they want to make the payments, but they can't because the trustees need to make the decision, and this is the process they follow, and they use the maximum time. And that's not something that we would want to encourage. But that is my very personal strong view, but that's also one of the things we're measuring in the omni-CBR. I'm not sure, Andy, I saw that you unmuted yourself there at a moment. Did you want to maybe add to that?
Yes, thanks, Juanita. I think I support what you're saying and I agree with you. But also just to remind everyone that we are actually not prescribing new time periods in the omni-CBR. We just want to see, I mean, you just select the dates that are applicable to you. So if it's more than 30 days, you would obviously select more than 30 days. So the time periods that you abide with would be those, you know, that are in your service level agreements with the funds. So you would indicate those in the specific sheets where we are asking for that information. But I think where Chantal is probably talking about is the all sheet sections. And I think there you can obviously just indicate that, you know, you've taken longer than, you know, the dates or the time periods that are put in that sheet. Thanks.
Thank you, Andy. I see a comment from Nasli. Thank you very much for that. Then Vishani, I hope I'm pronouncing your name correctly, asked a question about the turnaround times and said, shouldn't the turnaround times be specified in the admin agreements with the funds? And I think that is what Andy was referring to now as well, and discussed when reviewing admin fees with the boards. And Nancy then, okay, that seems to be a separate comment. Sorry, I see Nancy has her hand up. So if we could unmute Nancy. Nancy, you can unmute your mic and speak. Nancy, just try to click at the top on the mic. It seems as if we have a glitch with Nancy. Nancy, unfortunately, I'm going to have to ask you to type your comment, and then we'll deal with your comment in the chat function. Dis so baie om hulle in die hande te kry. I'm sorry, everyone. There's such a lot of comments now that I keep on scrolling beyond it. Nancy, I did see a comment from you. So if you will just bear with me for 2 seconds and then I will find it. There we are. You said that the payment of benefits are made in terms of the SLAs agreed between funds and 13B administrators. And any payment of benefit from a fund is subject to a SARS tax directive being issued. And this could have an impact on the number of days for payments to be finalized. And often tax directives are declined because members' tax affairs are not in order, which then makes it incumbent on the member to resolve tax issues before the payment can be made. And this could take quite a long time to resolve. You also think that the number of days should be aligned to the current 13A process, especially since contributions are received by the 7th day of each month and needs to be allocated to member records before disinvestments happen for benefit payments. So thank you for that very comprehensive response. Not sure if there's any comments on that. Don't see any hands at this stage. Juanita, would you like to respond?
Thanks, Charene. I actually think this is something that pensions need to respond on specifically. I do know, however, from industry experience, it's true what you're saying, Nancy, about the SARS tax directives and about the fact that no payment can be made if there is issues with SARS and if that's not resolved on the member's side, and that does cause delays. But remember, again, the return is asking these indicators, and if you're an outlier, when we compare you to your peers, everyone is having the same issues. So it's only when you're an outlier that we would need then to discuss it and try and see, because we're in that fortunate position where we have almost like this eagle's view. We can see what's happening in the industry. We can see how things are moving. And now we'll be able to see if you're an outlier in this area, why are the others more successful and how they're dealing with it? Is it because of the target market that they're dealing with or the type of funds that they're dealing with? Or are they doing it in a different process? Because at the end of the day, it's about the member and trying to assist the member in getting fair outcomes to all members. So what you're referring to here about the tax directives, I know, and I also know that SARS has had various engagements with industry on this, and there's been issues and consultation, and I think you were even one of the people that fought the hardest for the pension funds when it comes to SARS and trying to get this process better and more in line, if I remember correctly. And for that, members should be very thankful. But it's not something that only one fund would have a struggle with. And that's why when you give those turnaround times and there are delays, that is something that you should be able to measure. And then that's something that we'll measure whether there's outliers or not. And that will only be a flag as an indication. And that's why I'm saying the return adds value to the fund as well, because we will be able to assist you in trying to do your own administration better. In terms of the second comment about the number of days in terms of the 13A process and that we need to align, please make the comment when you actually submit the comments and tell us what do you think the breakdown should be. However, remember, The breakdowns on the all sheets should apply to all sectors, not just to the retirement fund sector. So it might be that you have nothing from 0 to 5 days for retirement funds across the industry, and it will always be 0 for everyone. And you'll only start commenting from the second tranche. That's okay, because then we know this is aligned to your processes, and we don't expect you to have a high number. You might have 1 or 2, but not a high number in 0 to 5 days. You'll be in the 6 to 10 days, or even in the later sectors. And that's why I'm saying, when we do the analysis, we do it on an industry level for that sector, and then certain questions we link up to see the entire cycle. So it's okay if your days are aligned to your processes. That's what we would expect to see in the returns.
Thank you very much, Juanita. I see there are some people who are also asking about a break. So I think this is a good time to just quickly take a 5-minute leg stretch break. My clock says it's 11:28, so let's round that off to 11:30. Could we be back at 11:35, please? So that gives you a 7-minute break. So we'll see you back in 7 minutes. Thank you very much.
love you, Roy.
Welcome back, everyone. I hope this small break helped you a little bit and helped you to re-energize. No advertisements to any batteries in that sentence included. But if we go back to the comment section, then there was a comment from Charene saying that there could be delays in finalizing claims to incorrect or frozen bank account information provided at claim stage by the member. And then the possibility of contacting the member to obtain the correct information, especially if cell phone numbers change. Yes, I think getting hold of people is always a challenge. So certainly granted that one. And Nasli also then commented on that to say, yes, boards and the regulator need to spend time in actual processing spaces so that they understand the challenges. That will assist in the understanding and mapping of solutions. And that's true. You know, we do need to be close to the industry to understand what is going on. And I do think that with the quarterly meetings and the regular meetings between industry and the regulator, it helps us to get a better understanding. I see Juanita would like to come in on this point as well.
Yes, thank you, Charene. And although from all the commentators around this about data and having the accurate data and being able to contact the claimant, the member or the family, we take note of that, but please remember that practically we actually expect you to have up-to-date information. It is a big market conduct risk if you can't contact the claimant or the member. So we would expect you, and we know practically this is very difficult. Believe me, we know it. We understand it. And we also understand it's something that you haven't been focusing on maybe that much, although those of you that do work with the insurers know that the insurers have placed a lot of pressure on you on trying to get this data and keeping the data up to date. At the end of the day, we have to protect the member or the member's family, the ones that have to get the benefit payment. And we have to ensure that they get a fair outcome. And that is trying to take all possible delays out of the process so that they can have the payment when they need the payment. And for that, you should be having up-to-date data. And this is an industry concern. It is not just in your sector, it's across the sectors. It's not that we don't understand it. It's not that we don't know of all possible other solutions that other sectors are trying, and we can maybe collaborate on how we can then actually use information from one another. But that's also why we do believe the omni-CBR will actually improve this across the industry. Because currently it was insurers struggling on their own, trying to convince everyone else to get the data, give them the data, have the data up to date, because we're putting a lot of pressure on them. Now we're going to expect it from every FSP, every retirement fund, every 13B administrator, the banks, that's also reporting in terms of the omni-CBR, the investment providers, the asset managers, and everyone will need to have the same level of data and quality of data. And that will assist each other. And that will, in the end, ensure that we cut out these unnecessary delays and ensure more fair outcomes. It'll take time, it will. But that is why we're so excited about this return, because for once we're getting the whole industry to move in the same direction and assist each other.
Thank you, Juanita. We have a comment from Eric, who says that the FSCA also needs to understand that requiring retirement funds and Section 13B administrators to complete these quarterly returns within a month will put considerable further pressure on the administrators in particular. For example, the need to complete quarterly management accounts very quickly, and will have a measurable impact on costs. I think we have discussed the costs before. Retirement fund trustees will inevitably have to rely on their administrators to do most. Sorry, I just needed to move down there to do most of the heavy lifting in completing these quarterly reports, returns, and then also comments that he hears what Marilee is saying, but the retirement fund sector is already heavily regulated, and he thinks that trustees will feel that they're already doing considerable risk monitoring. So Eric, thank you for this. We will have to monitor this when we get to the second stage. Juanita has talked about the second stage of the implementation, where we will be looking at the returns and the funds. So do please make any comments that you have about practical implementation when you do submit your comments. And when we get to the second stage of this phased-in reporting process, that's certainly something that's going to be considered at great length, I think. Then let me just move down. Then Chantal said that the section 13B, the business composition additional tab 1.4, do we also need to report on the number of participating employers were liquidated? If yes, perhaps an additional question should be included. So I think, Chantal, thank you very much. If you could provide that in your written comments back to us, that would be very useful. Do you want to add anything, Juanita?
Yeah, maybe if I can ask Chantal, while we're busy discussing this. So currently we have it so broad that it would include the employer, the participating employer funds. If I can just maybe ask, what would you think would the additional question be that we need to ask? I know you're going to give it in the comments process, but I think it would be interesting for us to know that since it is included, what is the additional question that you think we should be asking? How many of those funds liquidated were participating employers, to kind of see the difference? Is that what you're thinking?
Thank you, Anita. I see Corlia has raised her hand. So, Corlia, would you like to go ahead?
Yeah, I think remember we're asking that on an administrator level on the number of funds that went into liquidation, the funds under your administration. So maybe, Chantal, we can ask a question on fund level, maybe on when you choose umbrella fund, we can maybe add a question on the fund level to ask, listen, how many participating employers in that period went into liquidation. Because this is something that we want to look at the administrator to say, listen, how many funds is in liquidation during the period. Vis-a-vis, if we look at the specific information on a fund level, to look at the participating employers. So we can maybe align that, but the one on fund level and the one on administrator level, if that is maybe clarifying the position, because we want to look at this administrator level, not on fund level, whereas the participating employers are more on fund level as to administrator level.
Thank you, Corlia. A caution, could we give Chantal mic access, please? Yes, Chantal, you've got mic access. Please unmute.
Thank you. So, Corlia, if I'm understanding correctly, for the 13B administrator, they're just going to report on the number of funds under their administration that were liquidated, and then each retirement fund, if it's an umbrella fund, they will then report the level of number of participating employees that are under liquidation within their umbrella.
Yes, but we haven't, and that's something that I've asked Ryan now to just make a note, but we need to then have a question on fund level, maybe to look at the number of liquidations, participating employers going into liquidation. But on 13B level, you're just going to report on the fund level, not on participating employers level.
Thank you.
Okay.
Thank you, Corlia. Thank you, Chantal, for that explanation as well. If I go back to the questions, then we have a question from Vishani saying that, or maybe just a comment, we must always remember that there are different types of funds out there that attract very different types of members with different literacy levels. And that's very true. There will be a difference in turnaround times for claim payments, especially for industry funds who have help desks or walk-in centers for members of the public to come in to claim rather than claiming through the HR of a company. The quality of information supplied at claim stage to the different administrators will definitely differ. As we all know, not all blue-collar labor type fund members bring in correct information the first time around, and this will cause a sway in service delivery between administrators. And I think noted, we do recognize that as well. Then Chantal has also posted a comment to say that on the all conflict of interest tab, is the FSCA considering to provide a definition of conflict of interest? There is no definition in the PFA and neither is there a definition in COFI. And that we could consider the definition found in the King 4 code and adapt it where necessary to make it fit for purposes in the CBR. So Juanita, Makgompi, would you like to go ahead?
Maybe I suggest that question, maybe if Lizanne is still on the call to come in, because I know that conflict of interest is part of what we are considering as one of the working groups responsible for harmonization. Maybe Lizanne can give it a first step, and then Juanita can come in on there. Lizanne, sorry to put you on the spot. Yeah.
Makgompi, it looks like Lizanne has left us. I don't see her on the list of attendees anymore.
Okay, that's fine.
But maybe let me just see if Johannes perhaps. No, we seem to not have either of them. So Juanita, would you like to come in?
Thanks, Charene. Thanks, Makgompi. We can take it back and we can have Lizanne or Johan answer that. I actually just wanted to say, from when we consulted on the omni-CBR and we looked at which descriptions to give, we didn't feel that there would be a need to define conflict of interest. So this will also be one of those things that we'll have to see what is the feedback from all the sectors on the comments and whether this is highlighted as a term that needs to be defined. We didn't necessarily think so, that there would be confusion as to what we mean by it, especially if you also look at, so it is called, the sheet is called that, but if you look at the questions that we're asking on the sheets, very particular questions, we don't, it kind of tells you what we're thinking is possible conflicts of interest, but we don't ask you, do you have conflicts of interest and how you're managing it? I mean, those type of questions that are more qualitative in nature, we'll probably ask more in an annual return many years down the line. So the sheet is called that, but we're not, as far as I remember, and I'm also, we do ask you about potential events that can constitute a conflict of interest. That is the question where we use the term, but we didn't think that it necessarily needs to be defined for that one question. But because it will also depend, if you look at the question after that, we're asking about the declarations of conflict of interest that were reported by your staff. How many did you approve and how many did you reject? So that makes it a little bit subjective also in terms of what is the policy of the entity or the fund or the administrator about. Everyone has a conflict of interest policy. I mean, conflict of interest has been there for a very long time. So everyone has a policy, they have a way of how they define it and what they expect you how to react on it. So we're just testing there as to, do you have any possible events for it? And then when it was reported, how did you react to it? Because we're looking at the effectiveness of your policy. If we had to define the term, then it might then have the unintended consequence of people having to review their policies and see whether it's in line with what we're saying here and then being able to report on it. And that's why it's kind of more left open-ended that way for you to do it in terms of your policy, if that makes sense.
Thank you very much, Juanita. We have a follow-up question from Eric, who's asking, what would rejecting a conflict of interest declaration mean in practice?
So thank you, Eric. I see you come from Cape Town, so maybe you'll have to fly down and have an in-person meeting with us, or we can do a virtual meeting, because I think you raised very interesting points. This was actually one of those things we also debated a lot about. How would we do the term that would work across sectors and people would understand the easiest what we're trying to say? So we know that staff need to give you the declaration to say that there is a possible conflict of interest, and this is the information around it, and this is why it's a possible conflict of interest. And then you as an entity, as a fund, as an administrator, have to say you're aware of this, but no, you don't think there's a real risk involved, or it's being managed. At least the potential conflict of interest or the actual conflict of interest is being managed, and you're comfortable with it, and therefore you proceed. Reject would mean exactly the opposite from that. You're aware of this conflict of interest and you're not comfortable that controls are in place or that it's being managed, and then further steps or further controls or further actions need to be taken, or you're removing that person from this meeting or from the subcommittee because you don't think that that conflict of interest is being managed properly. So if you have a better suggestion on how we can put it, again, because we're trying not to define every single word that we use in the omni-CBR, because that we've seen causes more confusion, you're more than welcome to give us suggestions. What we've used in here, like I said, after a lot of consultation, is also what we're used to, what industry tells us in the engagements we have with industry. So we kind of knew the approved and accepted. People use that interchangeably, and that's why we put in both for that question, but the rejected seem to be used across the sectors. But you're welcome to give suggestions. Thank you.
Thank you, Juanita. I don't see any hands at this stage, and I don't see. Okay. Eric has a follow-up comment, and he says that he's not sure that asking someone to recuse themselves from part of a meeting is the same as rejecting the conflict of interest declaration, but this can be further debated. So I think, Eric, if you have a need for further, more individualized discussion, you are welcome to contact the relevant people, and that can then be taken up. I know people's energy is flagging. This has been a very long meeting, but if there are any additional questions or comments, please raise your hand or quickly type. Okay, I see that there's one hand. Nancy, let's try again and see if we can get you unmuted. Nancy, your microphone is activated, so let's try.
Thank you. I'm now in. Thanks very much for giving me the opportunity. And thank you, Juanita and Annie, for kind of clarifying the issue around the turnaround times in respect of in respect of instructions and claims and all of those. And in almost all instances, it's most likely that most funds are going to actually exceed the 30-day period. My concern is that if most funds actually exceed that 30-day period, is there a consequential effect for the fund and its trustees, and equally for the administrator? I mean, what is the intention behind this?
Juanita? Thank you, Nancy.
Sorry, I see Takalani also has a hand up. Maybe we'll give her an opportunity, and then if I want to add, then I can just add to Takalani.
Perfect. Akashan, can you unmute Takalani, please? Takalani, you can go ahead.
Thank you. I think I just want to go back to the comment on the claims, to reinforce that we're trying to see in terms of benchmarking, what is the industry actually doing? Nancy, if everybody is not making the 30 days, that informs the regulator that there are other things that need to be done to ensure that that 30-day as a good outcome for a member is achieved. So if we then need to work with SARS or whoever else to improve the process, to make sure that that 30-day actually works, then it's better. But we are really not, I think at this point, we're really not on the same page, because, you know, we get a complaint and it's now June and an employer submitted a claim form in January. It takes someone complaining on behalf of that member in April for the claim to then start getting processed. And I think that's where we're trying to understand from my side, what are the difficulties? Because clearly, we are only seeing the delays. We're not seeing the ones where it's perfect and the 30 days can be met. But if everybody's not making the 30 days, then as a retirement fund, because you interact with different people, the members might be a problem, this might be, then let's see what needs to be improved. If it's member education, if it is interaction, whatever it is that needs to be improved, let's work on the 30 days being the ultimate ideal, but only having exceptions. But if everybody's not making the 30 days, then that's a problem. And I think that's what we're trying to now gather is when we have these interactions, then we are told it might be a tax issue. It might be members not giving us contact details. But on a regular basis, no funds are telling us that the service level commitment is not being met because of the following. Everyone is saying we are good and the fund is happy and the performance is good. But when we have these interactions in terms of reporting, then we hear the problems. So I think let's start with getting the information and let's see how we can assist as a regulator to make sure that there's better outcomes for the members. And if it's the majority of the industry, then we need to do something about it together and not just from the administrator side. Thank you.
Thank you, Takalani. That was a very useful explanation of what it is that you want to do with the information and how valuable it is. Nancy, I see you still have your hand raised. Is it an old hand or do you have an additional comment?
No, yeah, I do have an additional comment, but I mean, I understand what Takalani is saying, and we, as you know, through inspections, we know that these things come up. But given the nature of the retirement fund business, often you can't actually meet, it's not reasonable to actually meet the requirements of paying it sooner because of the way in which the process around contribution payments, around contribution investments before the disinvestment to pay a claim happens, you can't actually meet those requirements. So my concern is that whether or not this is going to be used as a stick for a retirement fees, and or whether this is for the purpose of gathering information to look at a more smoother process around payment of claims or whatever the case may be. I mean, there's certain exceptions which Chantal pointed out, like the 37Cs and the 37Ds, and we understand that. And I think the adjudicators led us, and the tribunal has given us enough determinations and rulings in terms of how funds should apply this. So we're much more clearer in what we can do. But in terms of just day-to-day claims with withdrawals, with retirements, all of that, and members making elections to receive their benefits, it does create a problem from a retirement fund perspective. So I hear you, Takalani. I understand what you intend doing with it. But I just think the reality is that we've got to actually look at the process. And then that is my reason for commenting around the 13A process and how it works, and this being aligned to that. Thanks very much.
Thank you, Nancy. Takalani, I'm not sure, do you want to respond?
Yes, no, I do. I think, Nancy, my comment was also, I understand the 13A process point of view that you're bringing in. Sorry, I should have actually included it. But so, yes, you do receive contributions at a particular date. The Act says the minimum schedules must be in at a particular date. So in order for you to even see that a member is now no longer, going to be contributing, we're already halfway through the month. I understand that. I think where we are then going to have to see is, can we then work on a period or a time period that accommodates that process? So at the very least, by the 21st or whatever, this process will be completed, and then we will be able to start processing. So at best, a member will receive their benefit 40 days after. Nancy, I think, obviously, from my side, I speak from seeing the worst case scenarios where someone has retired and they haven't had an income for months. And there hasn't been a valid reason because they've submitted all of their documentation and there's nothing that has prevented the fund from paying. and with our involvement with unclaimed benefits as well, it's really it's process driven. So I understand that you need to do certain things first, but can we get the processes right? And update in time so that a member can get paid in time. I think if a member knows that that is what is going to happen, they wouldn't have an issue. I'm just concerned that if we're going to go to 90 days, before someone receives their withdrawal benefit or their retirement benefit, then that is a long period of time where the processes in any event should have been done. And I think that's when perhaps the conduct standard and Andy's team will come in with efficiencies in the administration processes themselves. Withdrawing online, when do you get notifications? That needs to be better communication with the employers so they can see the good outcome for a member where those things are done on time. But I might go on for forever, and I think, Charene, you were saying we were done. So, but Nancy, I think we do need to talk about it because we do want to understand from your perspective, and that's why also attending the board meetings has been so important, so we can see at what level the trustees are engaging with those kind of problems so that they can find solutions from it, because it's not an administrator problem only, it's that the boards must make sure that the administrators are able to meet those service level commitments that they've signed off on and have engaged on. Thank you.
Thank you, Takalani. Juanita?
Hi, so thank you, Nancy, for your questions, and Takalani for your response. If I could maybe just add to that. So one, Nancy, I hear you asking more than once if we're going to take action against you. That's not the intention of the omni-CBR, again, to take one tool, look at one outlier or one indicator and take action on that alone. It is a flag. It's a flag for us and it's a flag for you so that we can engage and that we can tell you, look, other administrators or other funds in the same position is doing it differently. You're an outlier. You're not meeting the requirements. Let's look at how we can improve processes. So it's not there to go and fine anyone or shut down anyone or anything like that. That's not the intention. It's an offsite monitoring tool that is part of our supervisory framework that we're implementing. It's cross-cutting, it's across the sectors, and it's giving us information to help us to be more proactive and actually be better partners with the different sectors. That's the first thing. The second thing I wanted to say is, yes, so before we talk about the turnaround times and the tranches we had, it was actually so that the retirement funds wanted to include a tranche from 30 to 60 days and then 90 days and above, the administrators. The other sectors, we fought them on this, not because we're not aware of your concerns and because we're aware of all the things that you're dealing with, but because we want to move this Titanic. So one of the things as an authority that you have to be very clear on when you send out a return like this is that you're also showing what is your expectation to industry. So if we keep our expectation there that anything above 90 days, as Takalani said, is okay, that's a fair outcome to a member, no matter what, then we're not moving this Titanic. And remember, we're trying to move it with all the sectors together. And we're trying to, as she also indicated, if we need to step in, if we need to do more to help you bring down those delays, if we can help you get those turnaround times right, then we need to do something. And then we know what we need to do, and we don't have these engagements and everything is great. And I know that when I have engagements with some of my insurers, and we talk about these 37C claims, and I want to get little heart attacks, and they say there's nothing that they can do. But please, if we can assist, let us do something. This is us trying to assist. This is us trying to see where is that delay, what can we do to help. But if you're an outlier because everyone else is getting it right and you're getting it wrong, we also need to then have that discussion with you and say, no, this is not because of SARS or because of this. That makes everyone fall into a certain level, but you're even beyond that level. So it's a Titanic that we need to move. It's not there just to be a stick and tell us who do we need to find. The other thing I wanted to point out, so we can consider adding those again to the turnaround times, but that's not something that we want to do because that's not our expectation. And if any of you had to be honest and you sit and you think about it and you had to pass away and your children is waiting for your money, and there's no one in your family that can actually assist, do you want it to take 90 days? Because I've told everyone that works with me, I expect them to do everything they can to make sure my benefits get paid out because my children need to be looked after. Okay, so we always have to look at it from the other side as well. The other question the other remark I wanted to make is, except that we're asking that question about the turnaround times and we're asking it on the all sheets that go across the sectors, we do on the fund question. We ask you about in 2.10, we ask you the question, how much surplus amounts is still due to members at the end of the reporting period? Okay, so we also look at what are you doing with the money? Is it being paid out? Is it not being paid out? Then we also have an additional question that also talks about funds and how quickly they are being paid out. And we ask about contribution in arrears and how many of your contributions, the value of the contributions in arrears, so that we can also see how quickly do you receive your contributions. So no question is looked at in isolation. We look at all the questions. We take information from different touch points to get the entire picture about what is your culture. What is the culture of this fund? What do they tell us is their culture? And then what is their actions showing us? And it's the same on the administrator side. And that's going to be the same as what we do on the banking side and with the insurers. So no question on its own will be something that we look at in isolation like that. And you'll see we also ask about on your fund business composition additional sheet. We ask about, do you have a committee that focuses on market conduct and fair outcomes? Because this committee is the one that should be looking at these turnaround times. This committee is the one that should also be measuring your administrators and seeing if there's delays and if there's another administrator that can do it better, not only on fees. So keep that in mind also when you do the comments, is look at, isn't there other touch points that we're asking so that we can get a complete picture? And although we have the governance sheets, and I actually said it in yesterday's session as well, and I'll probably say it in every session we have, the governance sheet where we ask about governance and culture is the more straightforward questions we're asking. It's the catch-all questions. Some of them are just purely compliance questions. It's not the only questions that we use to actually look at your culture. These type of questions, these touch points, now you deal with complaints, now quickly you deal with complaints, and whether you have the data and whether it's important to you to have the data and have it updated. Those are the things that actually tells us more about the culture and whether you're in line with the TCF outcomes and our expectations on it. And our expectations is what's being reviewed in this omni-CBR. It might not be where you are now. It might not be where you'll be in 4 years from now, but at least you know what we're expecting so that we all move towards the same thing. Thank you.
Thank you very much, Juanita. We have one comment from Chantal that says that maybe we need to have a turnaround time definition for retirement fund claims, which includes the requirement around election as required in terms of the Income Tax Act. So thank you for that. And then I see a follow-up comment to just say that she thought that the questions on surplus on the fund BC additional sheet was in respect of surplus amounts as envisaged in terms of the PFA. So that's just a comment. I'm not sure, Juanita, do you want to respond to that?
So in terms of, let me do the first one, the turnaround times. So the definition that we do have for turnaround times currently, which is number 75 on the terminology sheet, is because we want to measure it from a customer experience. So we want to measure it from the moment, or a member experience in your case, from the moment that I'm aware I have a claim or a benefit is due to me to the moment that I get it. In that process, there's different stages. And we would expect you as being a fund or an administrator that is very customer centric and want to look at fair outcomes and want to see how to improve your process, what this different stages, how long do they take? Because if you are an outlier and we start talking about that, you should be able to say, okay, yes, I know that, for instance, like the example Takalani used about how long did it take for that claim just to get to the fund? And was there an average, is there an administrator that takes on average longer to get it done? You'll need to know that, because that's the part that you'll need to improve to get your whole turnaround time down. So looking at a definition, we actually thought, Chantal, and again, we're very open to suggestions, yes. But we actually thought we did well on the way that we did the turnaround times, because we adjusted it for all the sectors. And we talk about the claimant, the customer, the complainant, because the turnaround times, again, we have to remember, is a term we use on the all sheets. So it applies to all the sectors. And we don't use it just for claims. We also use it for complaints, to actually measure the time that it takes. And it is to measure it from the customer or the member point of view. But we're open to suggestions. We just wouldn't want to give two different descriptions for turnaround times, because then I can absolutely 110% guarantee you from experience that there will be confusion, and then we won't get accurate data. It'll take us forever to get that right, and then the whole benchmarking exercise will take another extra 2 years before we get there. So we have to look at that. And remember, again, as we said previously, yes, you have the PFA and that is your legislation, but we're moving towards COFI, and we're moving to trying to align everything, and we're moving to conduct standards. So things will change, and we need to try and align. So again, we're open to suggestions. You're welcome to give those comments, but keep that in mind, and keep in mind you're not the only ones that will be completing the all sheets. On the surplus funds, you're quite right. That is the normal understanding of surplus funds. And while I was saying that, I was thinking maybe we could actually add then an additional question to do a touch point. So a good suggestion on that side. Thank you.
Thank you, Juanita. And I see we have a comment from Nancy just saying that she agrees with Chantal that the retirement fund business is very specialized. And I do agree, it is very specialized. So I think, thank you so much for a very robust and interesting discussion and your participation. We've thoroughly enjoyed it. It seems as if there's a number of the issues that we have to consider. We are looking forward to your comments. Please remember that you are able to comment using the e-services portal on the FSCA website. If you follow the e-services link, which is at the bottom of the homepage of the FSCA website, then you will find that there is a link on that page to the comments portal. It does at this stage reference another document, but the comments portal is open. And as Juanita said earlier today, we are aware of that glitch, and we're obviously working with our ICT team to just fix it. But the comments portal will be open until the 10th of August. We've also, right at the start of this workshop, posted the links to the webinar. So if any of you have missed the webinars, we recorded 3 webinars. In the first one, we talked about the purpose and the background and the timelines. In the second webinar, we talked about these sheets that apply to everyone, regardless of the industry that you are operating in. And in the third webinar, we then addressed the specific sheets that are specifically only for your industry. So if you've missed it, I think they are pretty comprehensive and will help to guide some of your comments, and may actually even answer some of the questions that you wanted to raise in the comments that you raised. Then at this stage, I'm going to ask Makgompi, would you be, Juanita has a couple of last comments that she wants to make, and then I'm going to ask Makgompi to just close for us.
Thank you, Charene. So we actually still have 2 questions that were sent through to us before the workshop. That through the discussions we didn't touch on, and I just wanted to attend to them. The first one is the question, I think the others we've all addressed. The first one is, why do we only ask about male and female? And why do we not ask information? Well, one, why do we ask gender information? But then why do we only have those 2 categories? So this is actually, well done. Also a remark that we got from the World Bank. They also said that we should include another category And while debating this, we were thinking of two things. So one, we're asking the gender information because we need to know this for financial inclusion. A lot of you would have seen that we have the fintech report, or the FinNorc reports that come out, and we talk about financial inclusion, and there is a difference in terms of ages and genders and who's participating in the industry, who's taking up products. And also when we do this benchmarking and give feedback to industry, this is the type of information that you would want to know. And you would want to know if the participation of males versus females have increased, whether things like the COVID, what effect has it had? Because it has meant that more women maybe that used to be caretakers now started working, and because they started working, they also got more educated, and because they started getting more educated, they started taking more financial products. There's been ripple effects like that, and we would want to monitor that in the future. It's also information that we as FSCA needs to also understand what is the behavior in the industry in terms of inclusion, and also certain products really make themselves known to be for specific target markets, and this is how we would measure it. So that's why we're asking about gender, and it's also information that we believe that you will have, because you'll have ID numbers, and you might even have that specific question in your application forms. When we look at another category, we said we'll leave that and see if we get comments from industry, because we didn't want to add it, because for the information we need, if we think in terms of the POPIA Act, we need to ask information that we know we need and that we need to use. So if we add another category, that's not necessarily information about a specific risk that we at this stage need to know. We're not aware of any discrimination that's happening in that area that makes people be excluded from the financial industry or from products or from any services. Plus, it's not information that is readily available, especially on existing funds and existing books of business. So it'll be difficult to do that breakdown. And if we had to put in that requirement, a lot of people would also then have to go through extra costs of changing actual application forms and information going forward. So it's a one category to add, but it has a very big ripple effect and a very big legal effect to it, and that's why we decided against it, because we couldn't see the value in that for versus what is going to cause. We're not aware of that risk in the industry. If there is a risk and we should be aware of it, you're welcome to raise that in comments. Then the other question we didn't touch on, and there were 3 examples given about the cross-referencing of terminology, and it was asked that we double check it, because some of the cross-referencing do not make sense. And one of the examples that were given was, for instance, if we look at the funds business composition additional sheet, and we look at 1.4, where we ask about the legal service providers who provide legal services to the fund. And in that cross-reference, we also cross-reference terminology number 76. And 76 refers to unclaimed benefits, and you're saying, you know, that cross-referencing, it might be wrong. So 1, we do take the point. We will look at cross-referencing, but 2, no, that's not a mistake. That number 76 needs to be there because we do know that some of the legal services that are being provided by funds also include assisting members with unclaimed benefits, trying to trace them, trying to claim on them. And we wanted to make it clear that when we ask that question, it is that wide. The same with the other 2 examples that were given. They were given on the all money movement sheet. When we look at 1.6 and 1.7, and we look at, and it goes back to number 63, which is referral fees. And if we look at 1.6 and 1.7, the questions, we ask about the number of payments or benefits other than refunds paid in the reporting period. And then also to your target market. And referral fees are sometimes used by entities as a way of marketing, and they do actually allow their own policyholders, own customers, own members to do referrals and then get a referral fee for that referral. So that would be a payment that you actually make. So again, that reference, that cross-referencing isn't incorrect. We wanted to explain to you it is that wide, that it would include the referral fees. Even if it's then paid to your own customer base, because that is one of the things that we've seen has grown a lot in the industry. It might not be that relevant to the retirement funds and the 13B administrators, but keep in mind, again, it's on the all sheets and it's not the only cross-reference that we're making. It's just to make it sure for all the sectors that they see it. And you know that referral fees and aggregator fees are one of the things we also raised in the RDR documents that we're looking at. It is aggregation functions is actually something specifically that you'll be licensed for in the COFI Act, and that we'll need to develop conduct standards for. And there's a lot of abuse when it comes to referral fees in the industry. And that is data that we're starting to get in and starting to track. So no, those 3 examples aren't incorrect, but we will look at the cross-referencing again. Thank you.
Thank you very much, Juanita. Leanne, thank you for your comment regarding gender. Noted, you are completely correct. There are more than just the classical classification of male and female. If you have any suggestions, please do make them for us in the comments, because that would be very useful to guide our thinking going forward. And then as they are, Chantal, thank you. We note your comment there. Corlia, could I ask you to close for us? Makgompi is on load shedding and he has some sound problems with his connectivity. And then from my side, thank you so much to everyone participating today, both the FSCA colleagues and the colleagues from the industry. It's been very interesting for me, not working that often with retirements funds and Section 13B administrators, to hear what your comments are. Remember that we have 5 more workshops to go. And if you are playing across more than one part of the industry, do please register for the other workshops. We look forward to seeing your participation there. Corlia, over to you.
Yeah, you know what, I'm actually a proud mama today, because I feel like I'm the mother of the retirement fund industry. So thank you for a very good session. We appreciate the interaction with the industry. And then I would like to thank Charene and Juanita for the lifting and all the work that you've done, and also for the team for this document that you drafted. And I know it was a lot of long hours and engagement, and so we want to thank you. And I think at the end of the day, if everybody comes together, it's going to be an excellent document, and it's going to give us the results that we really need to supervise the industry in a more proactive manner. So yeah, thank you. And for the retirement industry, I just want to say, I see that you're enjoying this type of workshops. We are planning a few more, but not on the CBRs, but on 13As. And I know Serena's got a few that she's planning. So yeah, keep up the excitement. We want to actually engage with you more throughout the financial year. So yeah, I just want to say thank you.
Thank you very much, Corlia. I really appreciate that. And it's going to be interesting to see the participation and engagement with the industry going forward. And in any event, there's always an unsung hero. And I think today we just want to say thank you again to Akash and Raphasha. He's been acting as the organizer and the background administrator for us. Without him, this event would not have been possible. So to him and the ICT team supporting, we really appreciate your assistance. Have a blessed day, everyone. Stay warm and safe.